Good morning. It's Friday, May 30th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So I went on CNBC yesterday. I discussed a strategy in the copper market, some of those specific fundamentals, some of the dynamics that I'm seeing that warrant the case for higher copper prices. If you get the Metals Minute in the email version, I'll attach the link to the video, which is on CNBC's website. Also, I'll be updating the chart pack this morning. So if you get that, you can if you don't get it, you can register in the link below. And basically what I do with that is that I create that as a roadmap to kind of some guardrails as far as what I'm watching in a few different markets here and some levels here for resistance, for support, and it's a bit longer term. This is where swing traders oftentimes utilize that particular product the most. Now, something that I get a lot of questions on, I get a lot of text messages and things like that where people will ask me over the weekend, kind of what's your process? How do you set up for the following week? So what I'll do is I'll grab my coffee, go somewhere relaxing, and what I mainly focus on is strategy papers and CFTC positioning. So what I do is I look for on CFTC positioning is extreme directional positioning. So last week we saw soy meal, feeder cattle, and wheat. So soy meal record shorts, wheat were record shorts, feeder cattle record longs. So then what I look at is what are some fundamental things that could cause this type of unwind, and then what type of strategy would have limited risk because of the fact that you would be counter trend trading that can oftentimes explode in value because of an unwind in the position. So what I'll look at is number of different option strategies. And since the market is so directionally biased, oftentimes the option premiums are very skewed, meaning they're very inexpensive and offer a significant amount of time because option sellers are complacent. Then what I'll do is I'll identify some kind of catalysts out there that could trigger a massive unwind. And I use those types of option plays as an overlay to some of the core trading that I'm doing, maybe in the equity markets, maybe in the gold, the silver, things like that. And that's how I'll utilize different option plays on top of things. So, for instance, a few things that we've been monitoring has been some strategy papers where they're put out by research teams and financial institutions. One of them talks about the weather in China and how they've had this significant hot, dry weather, how it's impacted the wheat market recently. And that's where you've seen these record shorts on wheat and they start to unwind it a bit. So China has even taken extreme measures like ramping up weather modification measures to boost your rainfall across wheat growing areas in north of the country. So it tells you how dire the situation is at the moment. This isn't a recommendation to buy wheat. These are just some of the things that I identify. Or I'll look at Chinese electricity demand because of the fact that you have this significant amount of heat wave going through. China last year had another situation where they had extensive amount of heat, and what it did was it caused air conditioner sales to go through the roof, and those air conditioner sales and appliances cause a significant amount of electricity and record amounts of electricity being utilized, which strains their grid, which causes more copper demand. Again, not a recommendation to buy copper, just an identification of things to keep on your radar. Another thing was in traditional 60-40 portfolios where you saw bonds underperform and you saw stocks really lag, and those type of people that think that they have bulletproof portfolios because they're balanced in that way, what would happen if they added just a small portion of oil, which often is a great indication of inflation and oftentimes outperforms in times of geopolitical uncertainty, as well as adding a small portion of gold to that, where you start to see some central bank easing. You also see central bank buying. You see different economic environments that justify higher gold prices and the impact that having a small amount of gold and oil to a 60-40 portfolio and the benefits of it. So those aren't recommendations. Those are just some of the things that over the weekend I'll start to be reading. So this weekend, as far as if you're trading in the oil market, there's going to be an OPEC plus meeting. Now, what they've generally done is they've come out with these very large targets for an extensive amount of ramping up of production and things like that. And what we see is some volatility in the market. And what I hate is that you're going to have a Sunday night open that's going to be thinner traded, and it's going to be headline driven, and the markets are going to make some big moves. So that's why, if you've been working with me closely, we've been scaling back on some of the oil futures and things like that. Again, not a recommendation. Every person's going to have their own way of trading in the markets, their own risk dynamics and things like that. But it's just something to note that crude oil could have a pretty wild Sunday night session. So looking at the markets, also the U.S. equity markets, U.S. stock futures, they're mixed. They're a bit in the red right now. We saw a dip to 58.91. That's been a critical level of support. We get a break much below that. Could open up the floodgates down to about 58.50. If the market can hold, and as of this recording, it's 59.15. If it can hold this type of level, this 5,900, we could see a bounce back up here to 59.60, things like that, 59.70, and work to the upside. The problem that we're having right now is that these markets, traders are really reassessing their appetite for risk assets, and there's a lot of uncertainty about President Trump's tariff policies and the impact on the American economy. That's why we're seeing gold futures, shooting up here 1 minute, crashing the next minute. So traders are really reassessing their appetite for the risk assets. You got 1 minute, it's a flight to safety. The next minute, it's risk on. Now, later in the session here in the early morning, traders are going to focus on U.S. personal consumption expenditures. That's the PCE data about signals of the health of the economy and the outlook for interest rates. So it's the Federal Reserve's primary inflation measure. Inflation is really important to a currency valuation because rising prices oftentimes lead to the central bank raising interest rates and then holding those interest rates higher for longer. So they really respect the inflation aspect when it comes to cutting interest rates or raising interest rates. Now, President Trump did meet with Jerome Powell privately, expressed the need to cut rates going forward, but the reality is that until they get tariff certainty and what it's going to do, you could see interest rates fluctuation as far as expectations somewhat all over the place. Most of these major financial institutions are paring back their expectations, taking it down to just one interest rate cut this year. So we're going to want to continue to monitor this tariff talk, this inflation data, and things like that. So that's what the markets will shift back to once we get the inflation data out, is going to be trade talks and then the legal battle within the U.S. So U.S. Treasury Secretary Scott Bessent, he said that the talks with China are a bit stalled. That's a bit worrisome. That's where you get gold futures pushing up just a bit. That's where you get U.S. equities coming off a bit. And it may require a call between Donald Trump and President Xi Jinping to reach a deal. Bessent believes that more talks will happen with Chinese officials in the next few weeks. So that's where you get markets now saying, okay, there's going to be some dialogue and discussion. So we're going to shelve that fundamental piece of news at the moment. Now we're going to bring it back to, hey, what are the legal ramifications? So the Trump administration insists that his tariffs are here to stay and that they will use alternative authorities if needed after a federal appeals court temporarily paused a ruling that suspended the bulk of his tariffs. So you saw this kind of rhetoric go back and forth. Markets started selling off as there was speculation that they'll include Section 232, 301 powers, which Trump has previously used, or those Section 122 powers, which are heavily restricted, as well as seeking some congressional approval. It was the second court that struck down the tariffs yesterday that boosted the market back up to about 59.20. So you're getting this kind of whipsaw action here in the gold market, in the U.S. equities at the moment here. So what we also want to watch, because of the date that it is today, it's May 30th, we're going to see some rebalancing, we're going to see some month-end flows, and then with the unease over the tariffs and the disputes growing, you look at places like Goldman Sachs, they're saying that their clients are buying some puts, some put spreads, things like that on the S&P 500 and the NASDAQ. So people are getting a little bit more defensive because of the fact that we've broken just a bit below into that 5,800 level. Now you look at some critical levels of support. I really think it's 57.50 again on the S&P. That's where you had that gap in the charts, and that's the gap that you want to see hold if you're a bull in the market. Now you look at some things like the gold market. Gold futures at one point yesterday were selling off aggressively. In the video, I said that, hey, perhaps that bull flag could be potentially failing, and then you get all this discussion and the whiplash and the headline-driven news takes that gold market right back up. So realistically, you need to see gold get over 3,400, in my opinion, in order to start breaking out and stretching to that 35, 3,600 mark, things like that. Otherwise, the possibility of that retest down at the 3,250 mark becomes more apparent, at least in the 3,200s. So people that are involved with the gold market, we would look at possibly adding some additional positions for clients when they come down below the 3,300 mark. Again, not a recommendation to the public, just an insight as to some of the things that I'll be identifying and I'll be looking at based upon individuals' risk needs, things like that, their willingness to take on risk in different environments, because of the fact that this market is moving about $85 a day is the average range in the gold market, which on a 10-ounce contract is about $850. Something else I'll look at here is I'll look at global equities. What are the flows? So we saw one of the biggest weekly outflows of the year, and that was about $9.5 billion. So that's another risk off type of play here. That's according to Bank of America. So you look at also the month to date performance leaders, and this is where you want to start thinking outside the box with other commodities. Obviously, platinum up 11%. That was your best performer. NASDAQ up 8 3/4. We get down to the nuts and bolts, or what most people are trading here. Silver only up 1.4%. Gold down 75 basis points. So really, the party wasn't in the gold and then wasn't in the silver market in the May contract. And you could see that in the chart pattern where futures really haven't gone anywhere. The bull flag here kind of stalling, series of lower highs in the gold market. Silver kind of consolidating back and forth. You look at the volatility index. Well, obviously, if you get NASDAQ up 8 3/4, the S&P 500 exploding, the VIX is your worst futures contract, down about 21%. Now, something else that we monitor is the ETF flows in the gold and silver market. The exchange traded funds, they added 271,000 troy ounces of gold in their holdings yesterday, and this was the biggest one-day increase since April 10th. Again, tariffs back on. People get nervous, they go into gold, they liquidate some of their US equities. It's also the third straight day of growth, but if you look at the charts, we've been down about 3 out of the last 4 days. So what's that tell you right here? Gold's kind of a mixed bag at the moment here. You look at the ETFs, they added 55,000 troy ounces of silver in their holdings. So if you look at silver, up 3.1% year to date as far as the percentage change on ETF flows. Gold with a big jump at 6.6%. Gold-silver ratio, not doing much overnight. About 100 to 1 here, 99 to 1. That recent low, 97 to 1 on April 23rd. That's something here we're going to want to watch. So I'll be monitoring, again, some of these outside markets, some of the cattle, the feeder cattle, Bitcoin futures, Bitcoin kind of breaking down here a little bit, maybe defining a new range between that 100 and 110,000 mark. I'll be looking at the copper market coming back down to some key levels of support, monitoring some of the weather developments in China, not only for the copper aspect, for the wheat aspect here, and then looking at that soy meal chart here as far as you have that record amount of shorts and how is the charts playing out. And the farther out you go in that soy meal market, it's looking a little bit more constructive. So those prices farther out oftentimes can give you an indication of what things are to come going forward. So you guys have a great weekend. Again, I'll update the chart pack. Got any questions, reach out. You want to open up an account, shoot an email to info@bluelionfutures.com or call the sales team here in the link in the description below or the phone number below. And remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, go get them. Good luck and good trading.